Hey everybody, welcome back. Well, we have a lot to go over. We're going to pack it in. I'm going to leave these levels in for a moment because we're going to drill into them. But with the economic data that came out, we need to go over that. And we need to go over pricing power because I don't think a lot of people are really getting the pricing power problem and how that's developing under the hood. But we're starting to see signs of it, obviously, and we're going to talk about that on the earnings front. But I want to leave these on for a second, and then what we're going to do is just drop this into an hourly chart so you can take a look at this real quick and just see those levels. Now, these were levels that we went over in the pre-market with you today, but they're also levels that we should be paying attention to for tomorrow. But really, have we gone anywhere? And the answer is not really. We had the big move up on Friday at the end of the day, that hourly move, and then we just stayed right here. We really didn't go anywhere from then on, did we? And then you just kind of come into Monday and then you just watch that 12 o'clock, the 10 a.m. fall down, the retest of that previous level, the rejection of that. And then what we did was just go right back to where we've been after that 3 o'clock on Friday. So if we got rid of all this, and I think this is worth paying attention to, if we got rid of everything and we just came straight here and looked, what do we have? We're at the same exact level of the hourly bar from Friday. Like nothing changed. Now, the economic data today is definitely something that we have to talk about, and I definitely want to show you the heat map, and smart money, dumb money is pretty fascinating as well. I do want to go over what happened today and why NVDA is getting the attention and why AMD, in my opinion, has even more problems. If we just focus on this, does this really look like something that's having a massive problem? And the answer is not really. But you have this 12 and this 22 and you're trapped in there. I used a 12, a 22, and a 55, and you're trapped in there right now, aren't you? So now the question becomes, what's going to get us out of that? Well, we really don't have anything major until non-farm payrolls this week on Friday. We have some other data coming out, JOLTS tomorrow, JOLTS jobs, obviously. But do we have anything that we really have to worry about? JOLTS could move us, but how much? It would have to be way off. It's really going to be non-farm payrolls. Now, ADP will give us an example of that. I believe that's on Wednesday. But NQ is the same exact thing. Same super reheated. Now, what we are doing is we are seeing rotation, and we're going to talk about that rotation because there's money to be made there, and I think it makes sense. Also, today, if you struggled, just understand that the New York Stock Exchange had a big quote issue, and you had really light volume, and that light volume led to a lot of breakouts not working and a lot of breakdowns not working. So today was a very difficult trading day. If you struggled with it, that might be one of the reasons why. But you look at Friday's action, and you look at this big move at, 3 o'clock, and this is where it gets interesting because what I'm always doing is I'm always comparing. Now, I would think, and there I go again thinking, that the NASDAQ would underperform the S&P because we're going to diversify out. But if you remember what I showed you earlier on the S&P, look with the NASDAQ and look how the NASDAQ is actually above where we're supposed to be. So actually the NASDAQ is outperforming the S&P. Now there's another really easy way to see this. In front of us is the NASDAQ relative performance to the S&P. It's a real simple equation. You take the NASDAQ and you divide it by the S&P. I'm just using a 5-minute chart, and all I did was just go out to May right here. If you take a look right there, that's all we did was just go out to May. And it just gives us an example, right? Something for us to look at. And you can just see right here where May is, right down there. And that's where we start. And then, of course, we can just see how this all played out, right? So from NASDAQ, and what we've done is we've outperformed, and the line's not going to be straight, but you get it. You can see how you've outperformed, and then from here we kind of trickled down, and then what happened? Then you kind of bottomed right in here. Now, why is this important? It's important because we're trying to figure out where the money's going. And there's no quicker way to figure out where the money's going than to just look at performance of relative sectors come across. Is that an area of contention? I don't know. We might be able to kind of look at it that way, but if we draw it thick enough, I guess anything's going to work, isn't it? But you can see that little part right down here where it tested before right along, and then you have this little neckline right in there. You see it a lot clearer now. Bear with me as I get used to this new system. But you have the undercut and the flip, and now you're starting to push that higher high. And of course, you can always drill into what? Shorter time frames, and then see that on a shorter time frame and go, okay, well, what are we saying? Well, let's just go back, and you see from that on, from the 23rd, and then what are we saying? Well, you're seeing outperformance, which is kind of interesting because it's not what I would expect at all. Here's your undercut, and then after the undercut, what do you got? You get a double bottom. So you really have a double bottom undercut, and we're buying NASDAQ names. I'm kind of surprised by it based upon what I saw today, and we'll see how long it lasts. Now, you would say, well, that's not really the case. And you could say, yeah, you're right. We kind of walked ourselves down all day. But then again, did we, or did we just retest and go higher? Because to me, we rallied, pulled back, rallied, retest this level, and then we held. Now, the question is going to be what outperforms this week, and we don't know yet, and we'll keep watching this, but that's a real easy way to determine which way we're going. I also think the heat map is worthy of our attention, and then seeing the rotation in the heat map. Now, I've showed you guys how to do this before. In front of us is the NASDAQ 100 and market cap. And if we start here, what we're going to do is get rid of everything except the extremes on the market cap side. So this is going to show you where the money's going. And really, obviously, NVIDIA, Micron. Now, NVIDIA came out with a new chip, believe it or not, or even the whole Blackwell. They came out with another chip at this conference in Europe called Computex. And it went very, very well. And he came out and said, we're going to be the one-stop shop. We're going to be the be-all, end-all. And some names really didn't act very well on that. We're going to talk about that as well. But what's important about this is he said every year there will be a new advanced version. This is what happened with Moore's Law and Intel in the late 90s. It was every year there was a new chip and you either had it or you were obsolete. But we are seeing some of these biotechs move and we're going to talk about that as well. But let's go look at the extreme readings and what are we seeing? And where we're going with these extreme readings is like CEG, VST was down today. That wasn't great. DXCM. So you always want to see where is this going and where's the money going. Now, the other thing that we can always do is go from market cap and just go to daily volume, go to NASDAQ 100 and put in the weakest according to volume. And then you're going to see that this had the biggest daily volume there. Sometimes you'll see things that are a little bit different. And you can see the skew changing here on the volume side, right? So it's very clear that NVIDIA by volume was completely outsized, but then it was Micron and then Autodesk and then mRNA, Dollar Tree. So it's always worth it to do that. Now, if we drop this down, again, I showed how to sort these. And you can sort by anything, but if you go back to the S&P, because if you're looking at this, it's all discombobulated for lack of a better word. And if we just click on these and go look at the big dogs based upon volume, where was the volume? Well, everybody would think that, oh, Google. No, the outsized volume was CCL, Para. So NCLH. So this is kind of interesting that these guys are getting that kind of outsized volume when you compare it to something like a NVIDIA. So we might want to take a look and see what's going on with the cruise lines tomorrow. So hopefully by me using this, see, I'm showing how to use this again because of your comments. The comments were, please show us how to, how would you use this? This is exactly how I would use it. I would go, well, what's the volume on the day? Size by volume daily on the S&P. Well, CCL, volume-wise versus NVIDIA, I mean, that's kind of crazy. Para, will they get bought? Won't they get bought? Who knows? Boeing, maybe something didn't go wrong for once, so the stock went up. But when you start to look at this stuff, it does put you in the right areas where you could look at, and it also will tell you where you don't want to go, and you can just see what's going on with oil. Oil was on fire, not so much. And then all of a sudden, we're starting to lose all the utilities. So maybe we can wait for those to fall down a little bit more that we have to get in, but we're losing all the oil names. We're losing all the oil service names. I guess we had World Peace today. Nobody told me, but we'll see how that goes. And then Hewlett's down again, but we also had Dell down. Now, I'm wondering if these are down a little bit because of what NVIDIA said. And one of NVIDIA's comments was they want to be the one-stop shop. So if they're going to be the one-stop shop, what does that mean? Does that mean they're going to cut other people out? I'm going to just be blunt about it. That's really above my pay grade. So I am not an expert at all. I know enough to be dangerous, and I know people that are experts, and I've been talking to them about it. And I don't know how they're going to do that. I think the issue for me is that no one expected them to come out with a new chip so fast, and I believe someone else already came out and upgraded them and raised their target. Here's the thing you have to take from today on what NVIDIA did. This is the part that you have to accept, whether or not you like it or don't like it, or you think it's too expensive or you think it's too cheap. I'm in the camp of historically it's still cheap based upon EPS. The problem is for those that don't like it on the bear side, earnings are going to go up because you have a new cycle that's going to be out there. And you're going to have companies like Microsoft that are going to buy that new cycle. What happened was everybody thought they had time. Over the weekend, Jensen comes out with this and says, by the way, everybody liked Blackwell. Yeah, we're on to something better than Blackwell. And this is what's coming next. And so everyone's going to have to go out there and say, you know what, there's another cycle and that cycle's coming faster. Matter of fact, that cycle's coming so fast, the flip to nanometers, 2 nanometers was supposed to be in 2027. They're talking about the end of 2025. And that's why you're seeing Taiwan Semi actually traded up today, and some of these other names actually had a bid, Lam Research, but Micron as well, because you're going to need it. Now, they all faded, but NVIDIA didn't fade. And I think that's very important. As a matter of fact, NVIDIA had an all-time high close today. And what I would suggest that you do with names like this, and this is really important, because it's not always going to be like that. I want to be really clear about this. There's going to be times NVIDIA is going to shine, and there's going to be times NVIDIA is going to go sideways. When you can look at these on a relative basis, and you go out there and just say, okay, well, let's just go to something along the lines of, I don't know, let's go back a couple days. And let's go back to the 23rd here. And you look at the difference here between the Qs and you'll see how we're acting. What I always look at and what I always think is important is when we're hitting highs like here, which we did, right up here, okay, on a percentage basis, that's why this is where it is. But on a percentage basis, and then you look and go, okay, we're nowhere near that. And then you go to another percentage basis, and then you're flipping that. And then you look here and you're not flipping. That's outperformance. It's just really that simple. And so when you see that level of outperformance like you saw today, you have to assume that hitting a higher high, why this is not. I'm going to be real clear about this, and you're going to want to watch this again because this is how you get in front of things. Okay? So the NASDAQ did not hit a higher high, and we can talk about why in a moment. But look at this. When you start to see that kind of divergence, you want to pay attention. It's not always like that. It's not. Matter of fact, you could actually go back and say, if you looked at this and did the same thing on the 31st, you're going to probably see the exact opposite where we completely imploded, right? Where here we are, and except for the end of the day. Well, let's get to that right here and show you so you can say it. But if you take a look at that, right, and then you have right here, which is the end of the day, the last 2 minutes. But really, the NASDAQ outperformed us all day. All day long, the NASDAQ was a better bet than NVIDIA. So you always want to look at that. Why? Because you're looking for changes in trend, and we just found one. Now, obviously, you can see this, and it's just an absolute monster of a trade, but I think it's really important to get that concept. I use that concept a lot to find out what name I'm going to buy, what name I want to hold overnight, because there's usually follow-through. Just think about all the people that thought they had all the time in the world and said, oh, I'm so glad I didn't buy it when Bob told me to buy it last week at that cookout. Right, Memorial Day cookout, and now, oh, by the way, it's at all-time highs. And they came out with a new chip. So how many people are going to FOMO all over themselves? And I think that's an important concept that people really sleep on. But before we go into some of the other data, I really want you to focus on what's going on internally with smart money, dumb money. Now, in front of us, we have smart money, dumb money. And for those that are new, we don't refer to this as smart money. We don't refer to this as dumb money. We refer to this as institutions and retail. Now, why do we do that? Because smart money and dumb money are calculated by what a smart person would do if they were an institution. I have a hard time with that. And when you get into this data, you start understanding that institutions are not always the smart people. Sometimes it's the dumb people, i.e. retail, that's actually catching on. For example, if you take a look at dumb versus smart, you'll see us in red, and I am retail. You'll see that we actually go up as the stock goes up, right? And what are they doing? What are they doing right there? They're coming down and they're selling as it's going higher. So it's really not something to say smart money, dumb money. Institution calculation versus retail calculation. You divide the two by their sentiment, what they're doing, and you come up with something that is extremely valuable. And it is. But also understand that we are fast movers and institutions are slow movers. For example, what will take us a period of time to get overbought, like you can see right in here, it won't take us very long, will it? From September to December, it's on. Where are institutions during that period of time? To even get there, they didn't even come close to that. They did in here, they moved, but if you take a look at even to get to something like that, from the first undercut, it took several months versus us taking about 2 months. And this is a really important dynamic because we move faster. So how is this helpful? Well, we want to know what we are doing. In other words, what is dumb money doing? What are we doing? What is retail doing? Bear with me, I'm getting used to this new drawing tool. And what we're always cautious of is not overbought, oversold. And of course, this 0.3 tells us that we're oversold. This is overbought. But what we're looking for are the mechanisms. And by mechanisms, we always want to watch the demarcation line and then watch that demarcation line on either side and say, are we going over or under? And what happens at that demarcation line? For example, the undercut and being oversold does not mean that you want to buy. Where you might want to take a look is when you flip back over it. And then again, when you flip back under this one, they might be points of contention. So if we came here and looked, you might say, well, that wouldn't have been the worst idea. And getting out there, was that the worst idea? Not really, not for the short term. Similarly, if you take a look when we flipped right here and cracked, is that the worst time to get out? Not really. Here, is that the worst time? Maybe. And what is the difference between this here and that here? The spread on where institutions were versus the spread on where they're at right now. That's the difference. That's why we also look at the spread between these two, not just what they're doing. There is value in looking at both of them, but what we want to do is not only just look at the comparison of what's going on. For example, one of the things I get asked a lot and why I'm going over this is, hey, what is going on with the smart money, dumb money, and what's going on institutionally? I think it's always really important to look at this because people will suggest that you don't want to do anything because smart money's cracking or we're rallying. I would say that really what you want to focus on is the spread and then looking at the performance of each one individually. I'll show you what I mean in a moment here. Now, if we look at here and we just go to the year versus the 2-year, you'll see very clearly that these spreads have been pretty consistent throughout time. And now we're back to that spread again. Where we started to see some kind of change was here. Now, what we have when the spread started, and you just would look at that and say, oh yeah, that's pretty clearly a top, but we already broke before that top started. Well, I would say that this point of convergence is something that you want to pay attention to. Meaning, not only was dumb money selling, but institutions came in and bought. And I think that's a very big differentiation here. So we want to look at the spread. Same here. Institutions were selling and retail was buying. And then how did that go? Well, that went pretty well. So the spread is also something that we want to pay attention to. And by looking at this year chart, if we were just to mark off the year when they broke this level, you could see that that's probably not something in and of itself that we just want to use. But what we'd like to use is it as a guide and then look at how it is in reference to the other one. This is by Smart Trader. It's not something that I created. I always want to give them credit for it. But it does give us an understanding on where people are at versus, greed versus fear. I want to know what they're actually doing. Now, this is just retail or quote, dumb money by itself. And over a year chart, if you were just to mark these levels and say, well, is that an area of contention? You could say, yes, it is something that we should be paying attention to. And you can see, again, here we are. And does that mean that we have to get out? I would argue, no, it doesn't mean that, but it does mean that it's something that we want to pay attention to. What we really want to do is we want to see how this acts. How does dumb money act in regards to smart money when we look at the correlation between the two? Now, in front of us, we have the actual chart that's going to tell us exactly what we need to know. And this is the confidence spread. This is smart money by dumb money. And what you're going to see here is this is just year to date. And so what we want to see is, well, what is this telling us? Smart money divided by dumb money. What's the spread? Here's the demarcation line. What is that telling us? If we mark this off, is that an area that we have to pay attention to? Well, the really only way to look at that and say, is that going to be is that going to be a top? Is this really going to be a bottom? When it starts to turn down, right? If you start to turn down, does that mean that we're going to start having a bottom? We don't know that, right? Just like when you cross under, is that going to be a time to get involved? The only way that you can do this is by looking at the past and then extrapolate what's happened. Now, from our perspective, I'm just going to go back 3 years, and we're not going to use this, but if we come to this level and we look when we cross over, is that an area that we should be concerned about? Like right in here, should we be concerned about this? And what we would do is we would just mark it off and just take a look. Well, that is an area where we had a problem before. The cross over and up. And then what we're doing is looking at that over and up cross. And what we're looking for is just patterns. We're not looking so much for it to work every single time, but is this an area of concern? And what I would suggest, if you're looking at it, you'd have to say, yeah, this is something that when this crosses right here, that is an area where sometimes, more times than not, that we do hit a point where we start putting in a top. So we need to monitor this. And essentially what it's charting is if dumb money is selling, is smart money buying it fast enough for that not to happen? And if the answer is no, then we're going to get the spread to do this. But I think this is really important because you're going to look at the one graph and say, oh, well, dumb money selling, but is dumb money selling fast enough that institutions can't keep up with it? Because if they can buy the demand, well, then we're going to go higher. So this spread will tell us, is smart money buying fast enough to support dumb money selling? That's what we want to monitor, and that'll tell us whether or not we're actually forming a top just by using this one particular metric. Obviously, there's other metrics to use. Now, this graph will explain everything pretty clearly, and I hope you like the smart money, dumb money, but let's talk about pricing power so people can understand what's going on. ISM manufacturing came in at 48.7. Anything under 50 is telling you that you have contraction. Anything under 45 is like de facto rate cuts. It means you really have very little pricing power on what's going on. So when this number comes out, after what happened with Chicago PMI, which we went over on Saturday, I'll link that video at the end, the dollar drops, equities rally, and they buy bonds, okay? And this is really important to get because what's happening is they're buying bonds, equities rallied, and then they are selling the dollar. Now, if we don't have pricing power, it's a real problem for companies and it's a real problem for earnings because the gross margins is how people make money. And we all know what's happening with some of the software companies. But I want to overlay a metric that I don't think a lot of people use. And I use this, and it's free, and you can use this yourself. And I'd suggest that you look at it. So this is Manheim used vehicle value. And what we've seen here is this will just tell you the average cost of a used vehicle. Now, why is this so important? I'll tell you why I think it's important. Because you could see historically, what does it do? It just kind of just keeps creeping up over time, right? You see this and just the curvature of it. When was the last time that you really peaked like this and then started dropping down? And what people are starting to realize, and we're seeing more and more of this, people that bought a car a year ago and they're going looking at that car now, on average, their used car, it's dropping precipitously. So we are losing pricing power. So all these lots that have all these cars that were making all this money by keeping the cars on there, they're not making money anymore. And I'm not just talking about how this is going to affect Carvana or AutoNation or any of those companies. This affects everything. Because if you don't have pricing power here, you're losing pricing power everywhere. And that's exactly what's happening if you're starting to look at what's going on with some of these commodity plays. But this is an important metric that people just don't look at. And it's definitely worth paying attention to, because you're not going to go out there and buy that car. And you're going to be paying on a car at a high interest rate, and meanwhile it's losing its pricing power. But this equates to pretty much everything. The easiest spot to look for this is just looking at copper, or you go and look at gold, and you'll start to see that maybe they're not acting the same way. Silver, you go take a look. Even uranium, and they'll get mad at me, but even when you start to see these names, they love uranium in the room. But when you start looking at these names, all these commodities are starting to look a little bit weak. I mean, when you really even looked at crude oil today, it's falling off a cliff. Why? Because demand for product is coming in. And this really flies in the face of some of the names what we heard out there. But really, when you start looking, and somebody went through them all, like MDB, CRM, and you start looking at these names and how they're acting and how they all miss numbers, Snow, how it lowered guidance. Is this a corporate problem? Is this AI eating the world or not? We don't know yet, but then everyone's looking at Crowd and wondering what's going to happen tomorrow night. I mean, if Crowd does well, it would be the exception, not the rule, because lately, if you look at the software names, they're getting smoked because earnings are so bad. And this is what we're happening. I'm not saying you can't overshoot. Of course you can, and we've seen that in the retail space and how they're rallying. But this is definitely something that needs to be on people's radar. It's not realistic for this to continue to go higher if the cloud names can't even get above their 200-day moving average. I mean, how much weight can semiconductors and AI and NVDA hold? That's really the rub. You may get a move out of it because it's mispriced, right? And we can all argue that, whether it's mispriced or not. But let's say that it gets to a point where it's priced, wherever that might be. Let's say 1,400 or 1,300. Well, then what? What do we have that's going? You need more than 3 or 4 names. I know it doesn't feel that way, but you do. So this is a concern of mine, and we're going to have to see how that plays out. Non-farm payrolls is a really big deal, but the pricing power is definitely a concern. If you are on the wait list, be aware the letters will be going out very soon. We're going to have a new batch go out very shortly. If you're trying to get into the community, the link is in the description. That's it.